Hi friends, this is Sachin Nachtani. Welcome back to my YouTube channel. Today I have brought a very special video for all of you, and this video is about two very prominent, very famous startups which got listed in the last 1 year, and very recently in the last few days they have been talking about one big buzzword, that is profitability. Yes, I'm talking about none other than two very famous Indian startups, PayTM and Zomato, that have been in the news for the right reasons. Now, in this video, I'll tell you what are those reasons, why are they so very important, and what, as an investor, you should do if you are holding these two stocks. Yes, PayTM and Zomato, this video is all about these two stocks. And if this is the first time that you're coming to this channel, don't forget to subscribe to my channel to get such useful stock market related information, and smash the like button so that it motivates me to bring out more such useful content. I'm very sure that each one of you must have at least heard this new found emphasis or focus of all these startups on one big buzzword, and that is profitability. Yes, all startups, whether in India or across the world, have started focusing on profits, and nothing but profits because of the pressure from investors, whether that is venture capital funds, whether that is investors, institutional investors, retail investors like you and me, endowments, universities, or whatnot. Everyone has started focusing on profitability and asking only one question: when will you turn profitable? Just to give you a brief background, all this started after the sharp rally in interest rates that was raised first by US and then by Europe, and of course also in India, because inflation shot up to 40-year highs and whatnot. Now coming back to the situation, because startups were almost always burning cash, raising more cash and burning more cash, the focus was almost entirely on growth and not so much on profitability. Profitability was something to be done about or dealt with far ahead into the future. But recently in India also, a lot of startups have faced heat from their investors, and some very prominent startups, especially the listed ones, that have taken this very seriously and started implementing some measures to turn profitable in India, and have actually turned profitable. We'll discuss that little later in the video as to how they have turned profitable. Those two startups, very prominent ones in India, are PayTM and Zomato. Yes, both of them came out with the results very recently in the last few days. I will talk about how the results have been, where is this profitability element coming from, and what you as investors should do if you're holding their shares. Should you buy them, or should you hold them, or should you sell them if you're planning to exit from them? We will discuss all this, and we'll also look at fundamentals, technicals, the outlook for both these companies, and much more in this video. So let's get started, and don't forget to like this video and share it with all your friends and relatives so that they also get benefited from the free knowledge that I'm sharing with all of you. Just a standard disclaimer, please pause the video and read it. This is what is the focus coming on entirely. Startup founders focus on profitability versus growth. Almost 55% founders are more focused on profitability of the startups than its growth in 2022. This is from just 17% of founders who were focused on profitability earlier. This is a very recent article you can see of 8th of Feb 2023. I'll just highlight it for you. More unicorns focus on profitability now than just burning cash as funding winter sets in. Again, this is January 16 article. Should startups focus more on profitability? Yes, we can have a very big and detailed discussion whether startups should focus on profitability or not, or whether they should focus more on growth in the earlier years and then on profitability. But just to tell you my perspective, now that some of these startups have got listed in India, the focus obviously has to also be there on profitability along with growth. Growth without profitability is absolutely useless. If I am an investor in any of these listed companies, what am I going to get? I am going to get return of capital, most importantly, and then return on capital. The return on capital can be in the form of price appreciation or dividends or buybacks, or could be in any other form. But how will I get price appreciation? Price appreciation will happen if and only if there is profitability. Yes, only if there is profitability will there be price appreciation of the shares. I can also get money in the form of dividends and buybacks. But how will companies do give you dividends or do buybacks if they don't have cash? How will they generate cash? Companies can generate cash only and only if they turn profitable and they generate free cash flow from operations. So yes, in my view, startups should definitely focus on profitability. Ultimately, if you are an investor, you're investing in those companies, you want profits. If you are investing in the shares of those companies, it means you are buying a portion of that business. Ask yourself, will you buy a portion of that business if it is loss making? Will you keep on funding that business from your pocket just to see that it keeps on growing, but your share keeps on depleting because it needs more and more cash infusion? Ask yourself this question, and I think the answer will be mostly very clear to each one of you. Now let's get started first with PayTM. PayTM came out with its results first, and here is a letter of PayTM founder in the latest result update. I'll read some of the snippets for you. So dear shareholders, I wrote to you on April 6, 2022 and set a target for EBITDA before ESOP cost break even. Look at this point. EBITDA, that is earnings before interest, tax, depreciation and amortization, or it is also called as operating profit before ESOP. ESOP is the shares which are given to employees, employee share option plan as it is also called, before ESOP cost break even by the September 2023 quarter. So they had promised this by the end of half year FY24, September 2023. I am very happy to share that the company has achieved this milestone of EBITDA before ESOP cost profitability in the December quarter itself. Yes, so PayTM actually turned EBITDA positive, but with some adjustments of ESOP cost in the December quarter itself. So 3 quarters or 9 months ahead of guidance. So this is the most important point which PayTM declared in its quarterly numbers, and I am sure just like the photo that you're seeing, all investors, all shareholders must also be very happy, and we'll also see the price performance. So these are all the details. I'm not going to go into the details because the results came out a few days back and I'm sure you had the time to look into the results. Now immediately after the results came out, because the numbers were fantastic, because the profitability came in 9 months or 3 quarters before the company had guided, so for of course with some adjustments as the company had already suggested, but still it was a very big event, and that's why you will see a lot of brokers and institutional investors or large FIs raise their target prices or came out with reports indicating large upsides. So here in this report you will see that there is this broker called Daulat, which has come out with a target of 1250 rupees, that is 138% upside. I don't know how many companies in India do you get to see where the upside is more than 100% in less than a year. At that time the price was 525. The prices of course run up very sharply immediately after the results were announced. You will see that in the next 5 days the stock price actually ran up by almost 19%. Now actually the stock price ran up by 25%. Yes, 25%, except for the fact that today, that is 10th of Feb, the stock price fell by 6-7%, and because of that you are seeing the 5-day move is only showing as 19%. I'll come to that point why the stock price fell down today. But a big parameter of the rally in stock prices in the last 5 days was not just the results but another important research report which came out. And yes, this is the research report that I'm referring to. This is a foreign broking firm based in Australia which is called Macquarie Research, and Suresh Ganpati is one of the most famous analysts over there. So this report came out on the morning of 8th of February, and the price on closing of 7th February was 588 rupees, and the target that they came out with was 800 rupees. Now, besides the target, the most important thing was Macquarie double upgraded to outperform. So earlier they had a sell rating, and then they raised it to neutral and then to outperform. So outperform basically means if you buy the shares, you will get outperformance over the benchmark. That benchmark would most likely be Nifty or Sensex or any other benchmark that you have, or midcap, wherever this stock is a part of that index, and raise the target price by 80% to 800 rupees. So they have given such a big upgrade, not just in the rating but also in the target price, and this brought about a lot of excitement in the stock price. We'll see what was the excitement and how it panned out. So this is the daily chart of PayTM, as you can see, and I will show it to you over here. So this was the day when the earnings were declared, and on the next day, this was the again a sharp stock price jump on 7th, but this is the price move of 8. The large green candle that you are seeing over here, this is the sharp upside that came in the price of PayTM on 8th of February 2023, and this move is about 14%. So it was a very sharp move in the stock price of PayTM, and you can see here the volumes. Look at these green bars and the volumes. You would not have seen these kind of volumes in the stock price of PayTM since it got listed. I don't know since when, since you can see this from March. You've not seen these kind of volumes. So these kind of volumes and the price going up so very sharply by 8%, 14% each day is telling you that most likely the sentiment in the stock is turning favorable. So these 2-3 day moves brought about 25% plus kind of price jump in the stock price of PayTM, and this was the very sharp rally that you witnessed in the few days immediately after results. Of course, today there is this big red candle because a very big block deal happened in the shares of PayTM. We'll talk about it in a minute. Now, what is very important to see here, because we're having a look at the chart, so let me also bring the focus on technicals. This is the 200-day simple moving average, and you can see that for the first time since the 200-day moving average has become visible. I'll just clear this first. This is the very first candle where the stock price has actually closed above the 200-day moving average. I'm referring to this green candle. And as you all know that usually any stock price closing above the 200-day moving average, especially going up from below the 200-day moving average, is considered a fairly bullish signal. Of course, the stock has to sustain above the 200-day period moving average since we're on the daily chart, so 200-day daily moving average. But importantly, this change is being brought about with huge volume. So it looks quite important over here to see that high volumes and high price rise is bringing about a strong price action from a lot of investors. This is the most important technical aspect that I want you to take from this chart. Now, today I told you that there was a very big block deal which actually happened. Apparently, there was a block deal of over 2% in the shares of PayTM, and most likely, as you can see in the articles, the article says that Alibaba exits PayTM, sells over 2 crore shares in block deal. So this is the news of around 4 p.m. as you can see over here, today's date 4 p.m. and a total of 3.4% equity or 2.1 crore shares have changed hand. In fact, the company had sold 3.1% of the 6.26% stake that it held in PayTM in January. So it exited in January and it exited today again in February. So Alibaba is no longer a shareholder in PayTM. Now let me take you back to the chart. So this is the list of all the major shareholders holding more than 1% stake in PayTM, and the largest shareholder you will see is Ant Financial, which is again a subsidiary or related company of Alibaba, but Alibaba.com Singapore is the entity that we are referring to, and By the way, this is a shareholding pattern as at the end of 31st December, which is declared by the company and shared with the investors on the exchanges. So that's why we will see that it's a 6.26%, but Alibaba exited 3.1% in January, and today again it exited 3.1% stake on 10th of February. So Alibaba is no longer a large investor over here. But the list that you will see over here is that Alibaba's another related entity is still a major shareholder with nearly 25% stake. Then there are these venture capital funds, SVF, SAF. Vijay Shekhar Sharma of course holds only 9% stake, so he is not going to sell his stake. So SAF again, BH International, Canada Pension Fund, and Mirae Asset Large Cap Fund. So these are all the large institutional shareholders. These may come to sell their stake at any given point of time so that they can liquidate their holdings and generate some profits out of the holdings wherever they are in a position to do so. Remember that these holdings have been allotted to the shareholders at very low prices many years back, and despite the sharp fall from the time of listing of PayTM, these investors are still in very big profits. Every time the stock price rises, there is a possibility that some of these investors may come out and sell their stake. So as investors, you have to be very mindful of all these things. Now, this is the point that I was talking to you about. Earlier, when the startups were starting up, when they were raising money, the focus was almost entirely on growth. Now, as from the seed funding, they go to Series A, Series B, Series C, Series D, and then to IPO, the focus starts shifting on profitability. And now the focus is much more on profitability and much lower on growth. It's not that investors don't want growth. The only point is that growth is going to be there, but growth should not come at the cost of profits or positive cash flows. This is the point that a lot of these investors have been telling to companies and their founders. So PayTM, Vijay Shekhar Sharma, and many other companies have that's why started focusing on profitability. Now I am not going to go into the details of PayTM results because you all must have seen the results by now and the price impact is almost played out. But what I'm trying to tell you is the fundamentals of the company in a slightly different manner. So I'm trying to talk about how the institutional investors, how the large brokers who are tracking the stock are focusing on PayTM and what are they looking at. So here we will see that there are 11 analysts who are looking at, who are tracking the stock of PayTM, and as of February 23 there are 7 analysts who have a strong buy, 2 analysts who have a buy rating, and only 2 analysts who have hold. There is no analyst which has a strong sell. So remember, if you see these ratings, there was only one broker and that was Macquarie, which had a strong sell rating on PayTM, and in February, that is last 2 days back, it upgraded its rating to buy or outperform, and that is why you see that there is 0 broker with strong sell. So what you will see is that 9 brokers have buy or strong buy rating and only 2 have a hold rating. So broadly the emphasis of brokers, research analysts and experts is also turning from neutral sell to buy and a strong buy. You can see the change that is happening from September till date, and the focus is going away from red color to more towards green color, which is a good positive signal for shareholders. What about the price target? Now if you will see over here, the lowest estimate is 695 rupees and the maximum estimate is 1285. I just showed you the research report from Daulat. I believe this is their estimate. Current price, this is when it is taken, is at 650 rupees. Of course the price is higher now, and the average estimate is 947, so approximately 950 rupees. So you have a huge 200 plus rupees upside possible from the current market price of PayTM over the next 1 year. So this is a very big upside of about 43% as the data from Trendline is showing us. Now of course, if investors keep on focusing on profitability but not on growth, then it is not a good momentum indicator for the startup companies, because the reason people or investors are putting their money into startups is because they want huge growth in the shortest possible time. But as the companies turn into listed entities, as startups have become listed, they have to balance themselves between profitability on one hand and growth on the other hand. It is of course a tough act. That's why you have to do the difficult balancing act, and you have to do it in a very gentle manner so that you don't lose your focus on growth and you keep your eyes on profits also. Over a period of time, I am sure that a lot of these startups will improve their focus on profitability without missing out on growth, and this is something which has turned in the favor of PayTM 3 quarters before their internal targets, the targets that they declared to the investors. So they have turned profitable 3 quarters before, and I believe that they can continue on the path of profitability. And as they have said that the next step is to focus on free cash flow generation. So if investors see that PayTM is focusing not just on profitability but also bringing about free cash flow generation, then I am sure that sky is the limit for PayTM. Let me give you a disclosure that I don't hold the shares of PayTM or Zomato. Tomorrow, of course, I may buy or I may trade in them, but at this point of time, I do not have any holdings or I have not had any position in PayTM or Zomato before. This is not a recommendation video. This is not a buy or sell recommendation. This is just for educational purposes that I'm sharing my views. If you want to take a position, if you want to buy or sell these shares, please consult a registered advisor. Now let's talk about Zomato, the other company which came out with its results yesterday. And Zomato also has mentioned that they have turned EBITDA positive, EBITDA profitable with lots and lots of adjustments. But before we get into that, do you know that Dipinder Goyal, the founder of Zomato, had actually dropped some hints that the company is going to turn profitable very, very soon? Do you want to see that? I'll show it to you. This is the tweet of Dipinder Goyal on 7th of February, and it said, "Congratulations Vijay Shekhar and PayTM on becoming profitable. Sorry, a bit late to the party, was so busy working on our own profitability." So here Dipinder Goyal had given very, very clear indications more than 2 days back before the results came out. The results came out on 9th evening after market hours, that the company is likely to turn profitable. Now we'll see what exactly has happened at Zomato. So this is the shareholders letter and results of Zomato, and dated 9th of February, Q3 FY23 results. And in this report they have spoken about lots of things. The most important highlight that I want to show it to you is over here. Milestone alert. Zomato business pre-acquisition of Blinkit, that is the quick commerce business where they promise you to deliver in 10 to 20 minutes, has turned adjusted EBITDA positive for the month of January 2023, despite a slowdown in the food delivery business, which is their core business. Now, if you look at the results, they have used the word adjusted so many times: adjusted revenue, adjusted EBITDA margin. In fact, everywhere they have used the word adjusted, adjusted. So many times they have used the word adjusted. They have actually become the subject of memes on social media everywhere, and I'll show you just for fun some of the memes that are circulating on social media, and you will also be surprised at the reaction of some of the traders and investors in the market. So look at some of the memes over here. My daughter thought that adjusted is the name of the company, told her it's Zomato. Now this is again a take on Zomato with the number of adjustments that they have mentioned, or with the times that they have used the word adjusted. 99% traders are profitable, X losses inspired by Zomato. So there are lots and lots of memes that are there. I took some of the ones which I thought were very interesting. Thoda adjust kar lo yaar. So after EBITDA, now even revenue has started to adjust. So PayTM gave adjusted EBITDA, and Zomato is giving not just adjusted EBITDA but also adjusted revenue. This post has come out with a very special meaning of EBITDA, and it says, "Earnings before I tricked the dump auditor." Of course, this is taken from social media, so you know. And again, Zomato results be like X Blinkit, X ESOP, X Hyperpure, so many adjustments are there. But what is very important, keeping the fun part aside of the social media aspect, is that these memes may entertain you, but the important point is that if you go back to 2020 and 2021, even ITC was subject to a lot of such memes. Everyone was making fun of ITC because it was just not crossing the barrier of 200 or 220 rupees. It was just hovering in that narrow 10% range, and there were so many memes being made, and today it is standing at 380 rupees. It is at an all-time high, 52-week high. It has given dividends for all these years. The growth has been stupendous, and now investors are queuing up to buy a share of company, and everyone is asking, can I buy ITC? Is it a good time to buy ITC? The point I'm trying to make is that whenever there are too many memes that are ridiculing the company, I think, this is my personal observation and belief, of course not a recommendation, that there is a possibility of change in performance of the company which is not getting observed or completely analyzed by all the investors, especially the retail investors. And if the company continues to perform silently for the next 2 3 4 quarters, then the price also starts catching up. In fact, it is quite possible that the price starts moving up beforehand itself, because market is always smarter than the an individual analyst or any individual shareholder. But coming to the daily chart of Zomato, here we will see that this is the 200-day moving average. Of course, it is also downward sloping, but the price of Zomato is still below the 200-day moving average, unlike that of PayTM, where it has already crossed and settled above 200-day moving average. So in November, Zomato had crossed the 200-day moving average, but it could not sustain above it. Even in December, it made an attempt, but it could not sustain above the 200-day moving average. Over here, the 200-day moving average has not yet got crossed, and we'll have to see when it gets crossed. Again, no recommendation, but it appears that the 40 to 50 range in Zomato is a very good strong support zone, because the price somehow just does not go below these levels and get strong buying interest over there with very good volumes. Just an observation over here. Now again, coming to the trend line data, what it says about the buy and sell recommendations. So this is the share price target. I'll come to the share price afterwards. We'll see the consensus recommendation. So there are 24 analysts that are tracking Zomato, and the number has been fairly constant over the last 7-8 months. 13 analysts exactly are rating it as a strong buy, 4 are rating it as a buy, 4 as hold, 2 as sell, and 1 as strong sell. The number has been fairly constant, so no changes over here. But the price target, so the current price of course is around 53 rupees, and the average estimate is 83 rupees. So that is an upside of 61%. The highest estimate is more than 100% higher at 126 rupees. But of course, we'll have to wait and watch how the performance of Zomato turns out over the next few quarters. So the idea of making this video for all of you was to make you understand the thought process of how a fund manager or how an institutional investor will look into investing into some of these startups. I have taken the example of Zomato and PayTM. Of course, these are not recommendations. This is just my thought process. So if you are an investor, think of it that how will an institutional investor focus on buying these shares? Will they invest more money just to burn their money just for the sake of growth, or will they put more money when they can see clear path towards profitability and free cash flows? An institutional investor should be very important in your thought process, because unlike you and me, we can buy few hundred shares, few thousand shares, maybe 1,000, maybe 5,000, maybe 10, 20,000. But an institutional investor like a mutual fund, an insurance company, or an FII, they buy crores and crores of shares into the funds under each of the funds. So they can buy 1 crore, 2 crore, 3 crore shares. So their buying, as you could see in the price of PayTM, starts impacting the price upside also. So that is why try and focus on how these investors are going to think about it. In my opinion, institutional investors are going to like the renewed emphasis of these startups on profitability, and many of them may start covering these stocks or investing into these stocks if they may have ignored them earlier, because earlier they were only loss making. Now although at an adjusted level they have turned profitable, but I believe if they continue this performance consistently for the next 3-4 quarters, more and more institutional investors will start investing in the stocks of PayTM and Zomato, and there is a possibility that these upside targets of 40%, 60% that you are seeing, they may soon become current market prices also. So friends, do tell me, how did you like this video? This is a new way of presenting a video especially for you guys. If you like this video, do smash the like button, do share it with your friends and family, and let me know in the comment section which part of the video you liked the most. Also, if you did not like some part of the video, feel free to share it with me in the comment section. Till then, keep watching my YouTube channel. Thank you so much for being a subscriber and watching this video completely. Have a good day. Jai Hind.